Hey, what's good, everybody? It's your boy Algo Bailey. Let me get to screen sharing real quick so we can lock in on today's Algo Talk. So this series is really just meant to, I guess you could say just, just have different talking points throughout the days, weeks, years, shit. We're just really gonna dive into trading psychology, different edges and tools of the trade, and really just anything that's going to help you become a more successful trader. So these series will be sometimes lectures and things like that. But the whole goal is just to equip you with everything you need to, be able to navigate these markets, get that money, man, because that's what we're here to do. So we're going to call this segment the 6 Commandments, right? And these are 6 laws to avoid getting clapped. That is the worst thing that can happen to you in the markets is to get clapped, AKA losing trades, right? We got a saying, we don't want no losers around, no losers around. But in order to do that, we follow some very simple concepts that help us continue to be successful at Option Snipers. And of course, our whole goal is to teach you those as well. Before we get started, don't forget to come snipe with us. You can follow me on Twitter at Salute Sir. The double I's right there. Also, you can find us at optionsnipers.com. You can book a session with me, all things trading. Once again, it's not investment advice. We can shoot this, talk to what, and find ways to make crazy things happen like this play you see in the middle. Also, don't forget to follow us at Options Snipers on Instagram. Also on the website, you can find our Options Trading Academy Plus. That bad boy is a beast right there, especially if you're just learning how to trade. I mean, it pretty much teaches you everything you need to know when it comes to options trading, which is entirely different than just trading the regular stock markets, entirely different than Forex. It's different than all that. So, this is one place you can go and really get everything you need to have the foundation to be successful. So let's just get right into it, right? The whole goal of today, we're going to go over 6 commandments that I live by that help me, trade to the best of my abilities. So we're going to go through the first one first, which is learning and growing equals happy, right? So when it comes to the 10,000 hours rule, basically what it's saying is that if you spend 10,000 hours doing anything you want. I mean, maybe you want to become a basketball player, right? Maybe you want to become a great trader, right? Maybe you want to, I don't know, become a great lawyer, right? What it's saying is that if I spend 10,000 hours studying, doing, practicing that task, I can master it. Right. And so for most of us, we haven't been in the markets, 20, 30, 40 years, right? We didn't get this passed on from like generation to generation to generation. For first, a lot of us, we are the first generation, actually trading in the stock markets. And so knowing that, we got to understand that this 10,000 hours rule really matters, right? And if we're going to master the markets, then we got to spend some time, right? I mean, if I only spend, maybe 4 hours a day when the market's going on, and that's the only time that I spend trading or mastering, well, I mean, I can't even do the math on that to think how long it would take me to amass 10,000 hours, right? Versus, okay, maybe I spend 4 hours a day actually trading. Then I also spend 2 hours a day reviewing, right? Maybe spend another 30 minutes a day reading, right? And then, I don't know, watching a video like this, while I go to the bathroom or something like that, right? Buys an extra, I don't know, 2 hours a day. Because you don't be doing nothing to work. You might as well put me on. Right. Well, now we're accumulating this time much faster than the quote unquote day trader. All right, we're going to become master traders. We got to understand that just like our bank accounts compound and our portfolios compound, so does the time we spend mastering our craft. And so the more time, the better. All right, so we got to understand that creativity matters as well. When it comes to trading, there's a wide range of emotions that you feel with every tick. Right? You know, I mean, you're probably happy here, depressed here, ecstatic here, iffy here, right? And then, I don't know, euphoric here, right? And so there's a wide range of emotions that you go through in trading. And you want to keep yourself in a place where you can be open, right? Where that brain of yours can be open. And what I mean when I say that is it's not clouded by, I don't know, what happened yesterday, or clouded by the anxiety of what may happen on this next play. You know, we got to stay in a creative space. That's how we're going to be able to capture the markets. We got to be able to you know, kind of you know, predict and also, you know, be able to think clearly without bringing yesterday's baggage or the anxiety of what could happen this time, right? And we can only do that in a creative space, right? So make sure that you protect your peace. If that means, you know, you got to go somewhere else to trade, right? Then that's exactly what that means. You know, you want to be able to focus, right? Because the worst thing ever is context switching, right? Where you have this going on, you got, I don't know, kids over here, something going on, you know, you have your phone and a bunch of text messages going on, right? Meanwhile, your focus should be on, you know, compounding your account and making the right plays. But I can't do that if I'm constantly being pulled in a bunch of directions, right? I need my focus, right? I need to stay in a creative space. Right, I need to stay shining. That's how we're going to win in the markets. It allows us to see things that we wouldn't be able to see if we were clouded by emotion. And your real mission in the, you know, in our community and really just as a trader is to find your edge, right? What I mean when I say that is you have to find what works for you, right? There's a couple things that go into that, right? How much time can I spend in the markets, right? Can I watch every tick kind of thing, right? Maybe I can scalp, right? Or day trade, right? Oh, I can't sit there and watch every tick. All right, maybe I need to swing trade, right? Maybe I need to do leaps. But, you know, time is a factor, and you got to be able to find your edge, right? Maybe it's just certain plays, right? We love the 3-bar play, you know, for continuation moves on breaks, you know, triangles, you know, bull flag breaks, you know, falling wedges, right? Like whatever your play is, you want to be able to find your edge, right? FYE, find your edge. That is the key to the markets, right? It's all noise unless it's not, right? Well, how does it not become noise? Well, you got to spend time looking, right, at what's going on, right? Watch the tape. You got to watch the tape. That's going to help you find your edge. And that's what we're all looking to do, right? Next up, you got to stay dope, right? And what I mean when I say that, you got to have discipline over profit every play. Your profit does not matter. Your discipline is what matters, right? Sticking to the plan, right? If you find your edge, right, let it ride out. You know, if you call a play, you know, hey, if it breaks, you know, a certain level of resistance, right, I'm going to wait for it to retest and I'm going to take it. Well, then wait for it to retest and take it. You know, it's really simple, but not easy as a trader to find your edge and then stick to the plan. but it's one of the most important things that you can do as a trader, because you're not trading in the dark, right? You're playing your edge, right? So I went from finding my edge to playing my edge, right? We live in a pay to play market, right? What that means is money equals more money, right? Sometimes money equals less money, right? The money it took for me is greater than the money I put in, right? And that will happen sometimes, right? But if I don't put no money, I get no money, right? So we got to understand, we got to keep ourselves in this place as much as possible, limit this place, right? It's going to happen, but we need to limit it to, a fraction of the time, right? 1 in every 3, 1 in every 4, 1 in every 5, 1 in every 6, right? Distance yourself from losing or putting money in, right? And it takes, more money than you put in. And there are ways to do that, right? And then, of course, lastly, there's nothing worse than watching your edge, watching your move, watching your play, right? You saw the 3-bar, you saw it forming, right? Got right there. You knew you could have taken the break, and you were like, no, I'm not going to take it, right? What if it gets stopped out? And then it rages. And that happens quite often if you don't play your edge, right? So you got to find your edge first, play your edge next, and you'll feel one of two pains in the markets: the pain of discipline or the pain of regret, right? So understand that when you're in the markets, there really is no middle ground. I'm either going to be disciplined, study my butt off, and then, from those lessons, just create more for myself, right? Or I'm going to regret not doing it later, regret not following my edge later, regret not setting my stops later, right? Regret not taking profit later. The pain of discipline or the pain of regret, you get to choose. Next up, you want to make it hard to enter plays and very easy to leave, right? Very hard to enter plays. So I'm going to just give you guys a example of this, right? Don't overtrade and don't blindly trade, right? So I'm going to give you a peek into our Discord real quick, right? And so, early in the day, I saw this bearish move, and let the group know that, hey, puts could print into the close. XPX was putting in a sell cycle. So, right, you fast forward, and if somebody was over trading or blindly trading, they probably, just jumped into puts just because I said, hey, puts might be able to print. But anybody that's in our Discord and trades with us, you guys know that I don't blindly trade. I don't serve a bias, right? I'm going to be water, right? And so what I did is I waited for confirmation. Well, we noticed that we got a bounce on the 50 moving average right here, right? And that would have been the confirmation for a break to the downside. All right, so then you fast forward a little bit more and you'll see that move actually turned very bullish, right? We went from a, kind of like a rising wedge break to now a V-shaped recovery on that, right? So that's why we wait. 2 moves, either, an inverse head and shoulder is going to form, or an H as this rounds out, or just rages, but this was a very bullish move. And then you could, end up fast forwarding to the end of the day, and you'll see it actually did turn into our good old inverse head and shoulders, right, which broke to the upside on a mean buy cycle on a 0 day. And we definitely had members that ate on that play, which is always awesome to see. Give you guys a little sneak peek on that. 42%, and that was just, in a matter of minutes. But that just goes to show, right? We don't serve a bias, right? We'll go from seeing something that looks really bearish, right? Maybe we're getting a down signal, right? But, let's say a moving average is there, right? And this bad boy pops back up. Like, don't get it twisted. I'll get really bullish, if it turns into something like it did today with that inverse head and shoulders. But you gotta be able to see things like that. And if I'm serving a bias that says like, oh, numbers are coming out, or this is happening, or that's going on, so it has to go down. Like, no, it doesn't. Market does whatever it wants to, right? It's either for us or against us. So we got to understand this about the markets, that when it comes to a play, right, there's either one thing or another that can happen. One, I was right, aka the price action went in my direction, right? I was happy with my direction, right? The other thing that happens is I was right, price action was not in my favor, and I got stopped out. Right? That's it. Right? For every play, I'm either right, that price action went for me for profit, or I was right, price action went against me and I was stopped out. But there's very clear if then clauses. Right? The best traders live by these. If then. If I'm right, price is going to be for me and I'm going to make profit and make more on my account. If I'm right and price was not for me, I got stopped out and didn't lose my whole account. Right? I didn't lose my whole account. Right? I didn't lose all of the capital that I put in. Right? A play is either for or against me. And for me, you should see that, pretty much immediately, right? Like, it shouldn't take too long for a play to be for you, especially in options, because the longer it takes for that play to be for you, the more it's against you, right? And so we want to make sure that we're being really clear with that. And then lastly, I want a clear exit indicator. So you guys know how I play SPX, or even on Tesla, right? This is what's up on our chart right now. So let's just use it. You'll notice that even with a play like this, let's say I was going to take a bull flag breakout, right? Well, I need to come with a stop loss, right? If I'm going to get in and maybe enter at this level, right over here. Hold on, let me go to annotate. All right, if I'm gonna go ahead and enter at this level here, at the break of this, well then I need to have a clear stop loss right there, right? I need to see both sides of the coin. Both sides of the coin. All right, plays for me or against me. On top of that though, I need a clear exit indicator, right? I need something that tells me to get out of this play, right? So let's say, I'm going to take it to to this high right here, right? So I'm going to enter at that level, right? And I'm going to take profit at 700, right? Maybe that's my go-to, right? Well, I need to have a clear exit indicator that says, okay, right, I'm going to, right, take price action to 700, right? Maybe I look on different moving averages, right? At a, right? Maybe I'll zoom in on this, right? Maybe I enter the play on, let's say, an hourly chart. All right, so let's say I enter the play on an hourly chart, right? Maybe I notice that, price action above this 36 right here, I like. Okay, well, maybe my exit indicator, right? And I love the 36 as an exit indicator. You guys know that, right? So a lot of times, and we actually did that. That was this move right here. We were in this play, right? And we entered, we got in early on the day, And we rode the 36 all the way up until price action really retraced to the 36, right? And that was our exit indicator. All right, I love the 36 as an exit indicator. So for those that don't know, this is our HMA, our whole moving average, 36 minus 1. And I can show you guys that real quick, just to give you a little sneak peek into these monsters, easy studies. All right, so is this whole moving average right here. Boom, 36 minus 1, that's the baby right there. All right, so just back to the point, we gotta have a clear exit indicator. We gotta have something that tells us, you know, maybe it's a measured move, right? Maybe you're like, hey, I'm gonna take the width of this. All right, maybe I'm gonna take the width of this triangle base right here, right? And I'm gonna project that upwards, right? And that's gonna be how I decide what my profit target is on a measured move. But whatever it is, it needs to be a clear exit indicator. There has to be something that tells you, you know, when it's time to get out, when it's time to take profit. What is my profit target? These are all questions that you should ask yourself before entering a play. All right, next up, we have SBT, stop, break even, trail stop, right? All trades are placed with a stop loss immediately. I'm gonna say that again. All trades are placed with the stop loss immediately. Once a profitable move, move your stop loss to break even or trail stop to ensure that you take home some profit. So this is a very simple process, guys, and I don't want to overcomplicate it. I want to make sure that we're trading the right way, right? If I'm trading this Tesla breakout tomorrow, all right, and let's say my entry is here and I want to take it to that 700 range, right? Well, at first my stop loss is going to be about right here, right? 673, that's going to be most people's stop losses. Why? Because that held itself multiple times and showed that it was support. Even when it broke under, didn't stay there long, used it as a trigger, right? So that's going to be a lot of people's stop loss, right? Well, once that move hits 685 or maybe around that area, well, I'm going to take my stop loss and I'm going to move it up a bit, maybe to where the break is, because, you know, there's a chance you get a break, a retest, and then you move, right? So I'm going to move it up a little bit to at least be a break even from when I decide to enter the play. And then once this play gets profitable, right, maybe I make it through the retest and now it's moving up, right? Well, then I want to raise my stop even more or do what we call a trail stop, right? Because that will follow my contract. And as it becomes worth more money, it'll make sure that if it does retrace, it stops me out and I bring home profits. All right, that's the name of the game, right? So every play starts with the stop loss, right? Then we can move that stop loss to break even and then move that break even to a trail stop, right? So stop, break, trail, right? That's the name of the game in this. Stop, break, trail. Always have a stop loss that comes in, right? After that, I want to make sure I never have a losing trade. I'm going to move it to break even, right? Best thing ever, put a trail stop on that bad boy and then just let it keep accumulating and it'll stop you out if ever it retraces back to that level. But this is super important, guys. I know I scribbled all over my chart instead of like using this blank sheet right here, but hopefully you guys understand the importance of that. I mean, it's super important. SBT. All right, next up, I just want to, we got to talk through some logic real quick, right? Take profits, not screenshots, right? So every time you purchase a contract, essentially you're holding a hot potato. This is a hot potato in your hand. This is your hand. All right. So our job isn't to hold that hot potato. It's to get it out of our hand, right, for profit. Right. If you need to look at this a different way, every contract you're holding is a live grenade. Right. The pin is out. This pin is out. Right. Well, what does that mean? That means I need to get this off for profit, right? Because the last thing I want is for it to blow up in my face. Every contract expires, right? So when it comes to time, is not your friend. Time is not your friend, right? Every single second that goes by is working against you. So we got to understand that every time we're holding a contract, we got to make sure we are, in and out. And at the very least, we're not letting it work, not letting time work against us in a play that's not working out. You can take profits before showing screenshots. I'm going to say this again. Take profits before showing screenshots, okay? If you're in a place where you want to show somebody how much money you've made, well, then you better make that money first, because realized profit is the only profit that there is. Nothing else matters. Nothing else exists. Just realized profit. Right. And then lastly, the best of us, we find bigger moves, right, macro, and play them on a micro level. Our job is to capture a piece of the pie when it comes to options, right? If we want to, capture the whole move, buy the stock, buy the shares, right? But most of the time you can't call a top or a bottom, right? It's very hard to be in the market. For anybody, to be in the market and say, okay, this is, it's going up, it's going to stop exactly right here, right? That guy's, fully, what. And so, right, as an options trader, what we'll do is we'll maybe find the measured move in that, right? And we'll say, okay, all right, I see a measured move here, right? So there's a chance that if it breaks this resistance up here, it could make that move higher, right? About this much. Let's say this is 10 points, right? And so we'll identify this maybe on a larger time frame, right? Maybe a 1 day, 4 hour, 2 hour even, right? And then we'll play, right? The break, the retest, wait for the retest. And we'll just play this little segment right here, right? We'll capture 7 points of that 10 points, right? Because once again, we want plays either for or against. And we need to know that as soon as possible, because every single second that goes by is working against us. So I really hope that makes sense for you guys. It's super important to understand this concept, especially in options trading. If you're going to be a great trader, it's going to come with great discipline. It's going to come with the ability to, see things from different perspectives, see things on different time frames, right? Using multiple indicators to decide if you're going to get into a play, right? I'm not just going to get in because the sniper AI said something. No, I'm going to go look at the chart, right? I'm going to maybe try and plot some things of what I see or think there could be, right? Maybe plot my profit targets, things of that nature. And also my stop loss. So I really just want us to make sure that we're, trading responsibly. And by following these commandments, I really think that it'll help you guys, in your trading. And once again, these are the 6 commandments, AKA 6 laws to avoid getting clapped. But I appreciate you guys joining me tonight. Feel free to make sure to hit that subscribe button. Definitely like follow up. We're going to be throwing a lot of content out there for you guys. And the main goal is just to help y'all level up. And like I said, I love our Discord, especially as everybody's been leveling up, because you can just see it. And you know, all like we have members calling plays out, you know, members like you didn't even know they were in plays and they're just posting profits and stuff like that. But that's because we all follow rules like this, because we understand that discipline is going to beat out talent in the markets, and it's our job to just continue to be able to stay in the game, right? Don't forget, guys, the second you run out of money, you are out of the game, right? So we have to have discipline that holds us accountable for what we're doing and how we're doing it. But I'll see you guys on the flip side. We got a big day today. We'll be trading live in the Discord. Feel free to join us.